what's up YouTube? You know, it's your boy Mr. Stocks on the Go, and we are back with a brand new video. Guys, please make sure you go ahead, tap on that notification bell, tap on that subscription button, and pound on that like button, guys. As you can see, we got proper lighting in here, and yeah, we have upgraded the studio, guys. As you can see, we are making progress, and I like this. And today's topic, guys, is a very hot topic. A topic that I see a lot of people talk about over and over. Also, please do remember to check me out on Blossom, guys. Jay the Investor. Yeah, you can check it out. Stocks on the Go 2.0. All right. So the main topic of today is which ETF is better? Is it Zsp or is it VFV? All right, guys, and that's a debate that has gone on and on and on and on and on, and I don't know, people can't seem to get the right answer. So today I'm here to give you guys the correct answer, based on history and based on facts. All right, so before we jump into that video though, guys, please go ahead, check out the links in the description and in the comment section that would be pinned if you'd like to support the channel, guys. As you can see what your support has done for the channel so far. All right, and that's a link for Wealthsimple trade, whereas if you sign up using my referral code, guys, deposit just $1 and you will get a $25 cash bonus to help you out on your investment journey, which is fantastic. You can also check out MooMoo Canada. They also have their TFSA and RRSP accounts right now. So I know all my Canadians, they're going to just jump on that immediately. All right, guys. So start building out your generational wealth. Start right now. Let's jump straight into Zsp and VFV. All right, guys. Please remember to smash the like button. Let's get this video to 30 likes. So where do we start? Okay, let's start at fees. I think that's one of the most important things before you go ahead and purchase an ETF, right? You want to make sure that you're not overpaying with fees and so forth. So VFV and Zsp are inexpensive ways to get investment exposure to the S&P 500 index. Both VFV and Zsp are priced the same, with both having management fees of 0.08% and management expense ratio of 0.09%. All right, so expense, they're both the same. So there shouldn't be any problem with making a decision between the fees of these ETFs. All right, the funds that have a lower management expense ratio allow you to grow and compound your wealth faster, especially over a long period of time. And I think that's what all long-term investors want. We want to build out our wealth. Whether we're starting from $100 and we're trying to get to 100K or 100 mil, we need the proper tools for us to do that. And we need the proper vehicle for us to get there. All right, so is it VFV or is it Zsp? Which would be your proper vehicle? Hey guys, when it comes to the performance, Zsp and VFV should theoretically be identical, especially since both funds charge investors identical fees, guys. Zsp and VFV have very similar inception dates, which make it a breeze to compare their performance over similar periods of time. Currently, each ETF has marginally better performance over different periods of time. And if we go ahead and look at that, guys, it will show us that in year one of their inception, year one, Zsp outperforms VFV. In year three, Zsp again outperforms VFV. In year five, Zsp again outperforms VFV, and in 10 years VFV outperforms Zsp. All right, although VFV has the highest 10-year compounding return, Zsp has the higher since inception return, guys. All right, So the verdict on this performance, guys, I'd say although performance should be identical in theory um, between the two ETFs, ZSP outperforms across most time periods, including since inception, making it the winner. All right, guys. Next off, we're going to head into yield. I know that if you're investing, most people who are investing in the S&P 500 ETFs, they're not really looking for dividend yield. They're more over looking for growth, right? So let's go in. I know it doesn't really make a difference, but it does add to the overall returns of that ETF. So we can't exclude it, right, guys? All right, so with the yields, since ZSP and VFV have identical investment mandates, they should, in theory, pay investors an identical yield. Both exchange traded fund offers quarterly distribution to investors. The ZSP ETF currently paying a yield of 1.33%, while VFV pays a 12-month yield of 1.26%. For some unknown reason, the ZSP ETF pays a marginally higher yield to investors. So again, guys, when it comes to the dividend yield, in this term of yield, although the ETF should both be paying identical yields, ZSP comes out on top again by paying marginally higher dividend yield. So if we scroll down right here on this article, we're going to check out the final part of this video. Please do remember to smash the like button, guys, if you are enjoying this video. All right, so now we're going to jump into the final part, and that is ZSP versus VFV, length of track record and fund size. All right, guys, two important things to keep in mind. Two important things to consider when investing in any type of fund, or how large a fund is, as well as how long a fund has been trading for. These are measured by assets and by how far out a fund inception date is. ZSP and VFV are both launched around the same time. ZSP was launched in November the 14th, 2012, and VFV was launched in November the 2nd, 2012. So VFV has been around longer than ZSP. Although the difference is small, ZSP does have a marginally longer performance track record, which is very small, a couple days. All right, guys. When it comes to the fund size, both ZSP and VFV are very large ETFs with billions of dollars in assets, guys. Let's scroll down. ZSP is one of the largest ETFs in Canada with over 9.2 billion in assets under management. VFV is also an enormous ETF, but only has just under 7 billion in assets under management. ZSP is much larger in terms of assets, guys. A fund size is important to consider when looking at newer and much smaller funds. New funds that are launched, which have only generated several thousands or a few millions here and there, are at risk of closing down early if they are unable to be profitable for the investment management company. This is not the case for either ZSP ETF or VFV. All right, guys, they are both safe. So let's sum it all up, guys. With almost identical inception dates, ZSP comes out on top in this category by being a sustainable larger ETF by assets under management. And last but not least, guys, the risk, as we all know, the risk we take with the ETFs is a lot more stable than just picking individual stocks. So I would say again, guys, if you already went with VFV and you don't feel like there's a need for you to change to ZSP, so be it. You have the S&P 500 ETF, and practically they both do the same thing, guys. I think I just have a little bit of OCD, so I like pointing things down to the 0.0001, whatever decimal it is, guys. So I like rounding it down to the last bit. So I've been doing a lot of research on these two ETFs before I started initially investing in them, or investing in Zsp. But that was my whole outlook, was Zsp was an overall better pick for me. As I said, I'm by no means your financial advisor, guys. So before investing in any stock ETF, please do your own due diligence. But Zsp was a better pick for me in the sense that it was easier to accumulate shares, whole shares. And after seeing this, guys, what would you say? Let me know in the comment section. After hearing all these facts, what would you do if you got the chance to invest back over in the S&P 500 ETF? Which one would you pick? Or let me know which one you already have in your TFSA or your RRSP. Let me know in the comment section. Also, guys, please remember to check out the links in the description, guys. It really does help out with the channel if you want to support us. As you can see, we are growing, and we are growing fast. And as I said, it's a family around here, guys. Please do go ahead, comment in the comment section. I can't wait to chop it up with you guys. It's your boy, Mr. Stocks on the Go. Stay invested, stay building out that generational wealth, and I am out.